The CPI numbers came out way better than expected. We saw an incredible bullish move upwards of the entire cryptocurrency market and traditional markets. The question is now, is this one final bull trap before we capitulate lower, or will this result in a macro trend reversal? Let's go ahead and find out. Okay guys, welcome back to the channel. Thanks for tuning in. I hope you're all having a fantastic day. Let's go ahead and dive into the chart. So Bitcoin saw a pretty big rally post CPI data. And as you've been paying attention to the Telegram channel, if you're in it, you would have seen that the CPI data came out to be around 7.7 for the CPI year on year, which was about 0.3% lower than forecasted. And the core came in around 6.3, around 0.2% lower than forecasted. And we talked about this in the channel and we said, you know, if CPI or core CPI is greater than forecasted, we're going to see a bearish reaction. And if forecasted is, if it is lower than forecasted, we're going to see a very bullish reaction. And we saw that. We saw it come in lower than forecasted and we saw a bullish reaction in the market. The question that is haunting the market now is this retest on the total cryptocurrency market cap, this retest of the breakdown point of that horizontal support range we had of this huge descending triangle. Are we going to get rejected from here and head lower, or are we going to just fake below it and push back through and continue upwards? And that's kind of the answer. That's kind of the question we're going to try and answer today in today's video. We're going to focus a little bit more on the technicals, run a bit of a technical analysis in a large time frame, and take a look at the short term as well. Now, before we get into it, let's go ahead and start our data. So we're at 21.1% yesterday. We've reclaimed about a 7% move on Bitcoin. It did move up quite a fair bit. So it's looking a little bit better there. Volatility, again, spiking, guys. Volatility was around 3.5 yesterday. It's all the way up to 4% today. Now we're pushing levels that we haven't seen, you know, since the start of June. We're pushing pretty high levels. We haven't seen volatility like this for about 4 months. So volatility is starting to pick up. As volatility moves upwards, volume moves upwards, the price starts to move a little bit more intensely. We start to see larger swings on the smaller time frames, on the larger time frames. Definitely something to keep in mind, guys. And of course, liquidations, not as bad as expected. A lot of these liquidations came from shorts, as you can see, but not as bad as expected, considering the kind of move we saw and the velocity and the speed of that move. Liquidations weren't too bad. So it looks like a lot of people were kind of playing it safe, maybe sitting on the sidelines and waiting, which was definitely the smart move to do. And let's go ahead and take the rest of the market. So obviously DXY did actually break down, and this is big. This is really big, guys. The DXY broke out of this expanding rising wedge, and if we go ahead and do a measured move from the expanding rising wedge, essentially this can take us all the way back down to 102, because measured moves from rising wedges, you take this point here, the breakdown point, and that is the directional move. So if we take a look at traditional market directions for these structures, we could see anything about 102. Now, it doesn't mean it's going to happen. Of course, we do have the FOMC meeting coming up pretty soon, not too long away now, and they are going to be hiking rates. Yes, it's going to be 0.5, but that could definitely bump the DXY a little bit upwards and see some sort of reclamation on this level. Again, I'd be more inclined to see this move downwards until it reclaims this red line, which is around 109. Nevertheless, big reaction in the market upwards. Of course, the DXY is going to have a big reaction downwards. They are inversely correlated. Dow Jones, guys, big move. We saw that retest of this downward trending resistance. All right, we saw a significant move upwards. Now, we were expecting a move to around 34,000. We didn't see that. We saw around 33,800, about 200 off. Pretty close to that move. Still a great move for the Dow Jones, looking very strong. S&P 500, super move by the S&P 500, busted through basically 2 major resistance zones over here, looking very strong, but obviously potentially topping out on the smaller time frame here. We do have some sort of neckline forming with our previous high, forming as a rounded bottom formation. Okay, bonds absolutely destroyed. 10-year government bonds falling out of this rising channel formation to the downside here, and the 2 years as well falling out of that rising channel formation it had on the smaller time frame, not as aggressively on those 2 years though. All in all, guys, the markets right now, from an objective visual standpoint, they're looking good. Okay, doesn't mean they're going to continue upwards. We're going to talk about that today. It doesn't mean they're going to continue upwards, but the reaction we saw cleared some good levels. Okay, they are looking good, but usually when we see stuff like this happen so quickly, we do sometimes see retracements. And that's what we're talking about today, because there are indicators on the chart, or indications on the chart, particularly this over here, which is potentially telling us, you know, yeah, this move was great. It was a great reaction to CPI, but this could be a bull trap. This could be a bull trap. We could get rejected and continue down. As we know already, guys, the measured move target for the breakdown, or the target for the breakdown of this descending triangle for the total cryptocurrency market cap was 400 billion. Okay, 400 billion, meaning if this pattern develops and plays out fully, the lowest this will go is 400 billion. Where will that place Bitcoin? Well, very, very simple stuff, guys. If the total cryptocurrency market cap comes down to 400 billion, that brings Bitcoin down to equal levels, which takes us around about to anywhere between this high here, which is about $13,000 to $11,000. Okay, so we're looking at a range between here. So a big drop for altcoins to come if that does actually continue downwards. Bitcoin is closer to that bottom point than a lot of altcoins would actually be if the trend does continue downwards from the total cryptocurrency market cap. Okay, keep in mind. So let's go ahead and take a look at the short term, discuss what's actually happening, and then we'll go ahead and take a look at our technicals and try analyze the market and take a look at the strength of the trends and really see what's going on. So let's move to this chart over here. So this is our horizontal resistance range chart. As you can see, this green line, I'm gonna actually go ahead and get rid of this little black line over here. This green line represents the local bottom we developed, or what was the bottom that we developed in June, on the 18th of June, sorry, 2022, which is 17.6K, okay? That was where we developed it. Currently what we're seeing here is a retest of that level. So not only do we have a retest of 17.6K, we have a retest of the breakdown point for the entire cryptocurrency market. 2 points of potential significant rejection and resistance. Therefore, going from a risk-reward ratio, a risk-reward mindset, shorts are more favorable here, okay? This is massive, massive resistance. This has been support, okay? We're looking at months, we're looking at half a year nearly. All right, 150-day long support has now just been flipped as resistance, guys. This is definitely not a good thing. Therefore, shorting right now is more favorable in terms of risk return than longing, okay? If by a miracle this does get reclaimed and we find this support again, that is when we'll be looking for longs again. Until then, you are more likely, or should be better off, looking for potential opportunities to short. And when I say looking for shorts, I'm not just saying, oh, we'll reject it, let's just click the short button and hope for the best. No, that's not what it is. It is, we're in a market environment that would facilitate short moves better than moves to the upside. It doesn't mean we can't see short-term swings upwards, okay? But our short-term swings on our shorts will be more inclined to fully develop their measured moves and hit all targets than what we would see as longs, because the trend strength is significantly negative right now, okay? So your goal in this market right now is to be looking for opportunities to take shorts. Remember, we talked about this for a long time ago, we've been saying for a long time. I know a lot of people say this, trade with the trend. You have to be able to identify the trend and trade with it, okay? It doesn't mean you're always going to be right. You might be wrong, okay? Sometimes a trend points upwards and then something chaotic happens, okay? Such as economic news or sporadic price action, volatility out of nowhere, manipulation, okay? But if you trade with the trend and take positions with favorable risk return always, over a long period of time, you are going to be correct. You're going to make money, okay? Take the bottom, for example, and this is a good example. Take the bottom, for example. I'm going to go back to this chart. The risk return on buying here was significantly more favorable than not. So yeah, I called the bottom at 17.6K and I happened to be incorrect. We did eventually crash back down, but provided it was 160 days until that occurred, okay? And during that time, we saw a swing of over 40%. We capitalized on many moves on here. So if you identified the risk return at this point was positive, you'd be looking for longs this entire time. You would have made a hell of a lot of money, and we did make a hell of a lot of money. And right now it's flipping. So now we're in a scenario where shorts are more favorable. We'd be looking to take short positions over long positions for the duration of this move until some sort of support or bottom or reversal point is identified, okay? Let's go ahead and just dive into a smaller time frame again and just really discuss, how it's looking. So we'll go all the way down to, let's say, a hourly chart. So what we're seeing over here is obviously a very clear rejection. I just want to go ahead and show you this green line. Keep in mind is that 2022 June absolute bottom, okay? Not only do we see a few candles push above and reject, okay, on the hourly chart, but on the last hourly candle, you can actually see a final retest of that candle, of that horizontal resistance range with that upper end of that candle, that opening price of the candle. Let's dive into a smaller time frame so we can see. So on a smaller time frame, let's go ahead and input some trend lines. So we have our uptrending support line over here. This is a very obvious uptrending support line. And looking at the rejection points over here, we can actually identify this as a possible first support. So we're looking at some sort of a rising channel over here. We'll be looking at a first support or retest of support down at this trend line. We can go ahead and put some horizontal levels in at previous highs. We can say we could see, and I think Wolves of Crypto is actually just sending me some messages right now. It is Wolves of Crypto. He needs to stop messaging me while I'm doing a video. Let me just go ahead and delete that chat. Okay. So we can see some sort of move downwards to this trend line over here. Okay, that will be the immediate short term, I think, for Bitcoin. A move down to about 17,000. I think we'll retest $17,000 level for a bit. If we do then lose 16,800, I think we do continue downwards to potentially even retest these lows down over here. Okay, the short term is by no means looking very good. If we go ahead and go to a 4-hour chart, we can see on the 4-hour chart a much more clear picture of this rejection than we can see on the 1 hour, as no 4-hour candle has actually closed above that 17,600 level. I will be looking at potentially taking some more longs if we see a weekly close above this level. I'd ideally like to see 4-hour as a minimum, daily at a minimum. Weekly would be very ideal. If we go ahead and take a look at this upper range again, if we do push back into this range, and I mean by into this range, I mean above 18,400, we are back within this horizontal channel, and then everything we have discussed about this horizontal channel comes back into play. Remember, horizontal levels don't disappear as much as diagonals. They stay very much relevant in certain timeframes, depending on what timeframes we're looking at, okay? So if we do somehow get back into this level here, this horizontal range will get back into existence, and therefore those levels will become valid and relevant once again, okay? Keep that in mind. For the short term, I do anticipate we go downwards. I think we'll be targeting around 17,000 in the short term. There obviously is a potential we can go lower, and of course we do have lower targets down over here. I think that's about it for that one, guys, on the short term. Let's go ahead and take a look at the entire market and do an analysis. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So we'll start with divergences and see if we can see any divergences. And what we do point out over here, first and foremost, on the daily chart, was a degree of a bullish divergence playing out on the 1-day chart. And you can see this bullish divergence over here. And a bullish divergence, for the new people to this channel who don't really know, is when we have a discrepancy between the momentum and the price action. Meaning, in this scenario, we have declining price while we have inclining momentum. This is generally a bullish divergence and usually results in a spike upwards. The question is, will this actually sustain into anything, or was this a spike we were looking for from the divergence? So again, we can't really tell from this chart alone, but it does indicate a possible bounce point, and we did see a bounce, so that is something to keep in mind. Zooming outwards, guys, we'll go ahead and get rid of that. Let's go ahead and bring up our bull market support band on a daily. As you can see, we did lose that bull market support band on the daily again, and on the 3-day, we'll take a look at that. On the 3-day, the bull market support band was again lost, and even on the weekly, let's take a look at the weekly, I think we did get rejected from it. So on the weekly, we also got rejected from that bull market support band. Of course, so you already know, bull market support band is a very slow indicator. It's comprised of pretty slow moving averages. So yeah, it's not great at predicting reversal points, but it's pretty good at predicting macro trend. In terms of the strength of macro trends. Generally, where we are above the bull market support band, we do generally have a macro uptrend, and vice versa. Currently, we're still underneath the bull market support band, getting that final rejection. The last time we actually retested and rejected was back in April. So it's been a while since we retested on the weekly, but unfortunately, that did end up in a rejection. Let's go ahead and take a look at our VRPV, and we'll go ahead and put on 200, perfect. As you can see, we are moving through a historically low trading volume range. And this is, of course, this range between around 19,000, as you can see, was this peak, okay? That peak indicating 3 key points on a chart, being the 2017 all-time high, the December 2020 crunch zone, and of course, a horizontal support line we stayed above for about 160 days in 2022. We have currently lost that level. This is an incredibly strong resistance now, okay? Reclaiming that resistance would be ideal. Very bullish to reclaim it. Until then, very bearish, okay? We're in this very strong downward, or should I say declining range of historical selling volume, or buying volume as well, right? This indicates, or this shows us historical volume on individual price points across a range, okay? It's a visible range volume profile. So what it's telling us is there's, during this price range, and we can expand this price range here and expand it over here. As you can see, we generally don't have actually much price action. We've seen a collective amount of probably, I would say, no longer than maybe 2 months max in the history of Bitcoin within this price range. And when we have these zones where we don't have a lot of price action, we're entering territory where we don't really have a lot of established supports. And the issue with that when we're moving from a top side down is because we don't really know where the price is going to develop any potential bottoms. And it really could be anywhere in this range, or like we said, coming down to that 12,000 range. And that's what we said. I think 13,000 to 11,000 is a safer target, because it kind of puts us on the upper and lower side with +1, -1 deviation from that major next peak on the VRPV, which is 12,000. But like we said in yesterday's video, guys, just because the VRPV is suggesting there's a very low trading volume range here, as the price starts to move into this range or down or whatever it does, we'll start to see little valleys forming on the VRPV, and then we'll have supports developed. So just because there is currently no support now, it doesn't mean there won't be support in this range. It's very important to understand that support is never there until it's developed. At some point, every support has to be developed for the first time, and that can occur. Just because there's no historical support here, it doesn't mean we can't develop support here. So it's very dangerous to just assume we're going to nuke all the way down to 12,000 here. We could definitely potentially see a lot of support along the way, develop new support lines, develop new zones, new ranges within the price action between the points of 19 and 12,000. Keep that in mind, guys, okay? Very relevant, very important stuff to understand. Even when you're trading a short time frame, it's very crucial information. Let's go ahead and take a look at some of our moving averages. These are our smaller time frame moving averages. We have the 4, the 15, the 17, the 22, the 26, 28, 32, and 50 being that red line. As you can see on the daily chart, we'll go to the daily chart to start off with. We did reject from the 50, we rejected, we crashed down these smaller time frame moving averages. But the key thing to look at here was that 2-day rejection on the 50 EMA. That was the big rejection, that 2-day rejection on the 50 EMA, followed by an aggressive sell-off. We've seen that numerous times. Generally, when we see these big moves downwards, it's usually because we lose the 50 EMA or reject from the 50 EMA on the large time frame. Look at every single one of these significant drops. It's usually because we do not sustain above the 50 EMA, or we just blatantly reject from the 50 EMA. Even here, we just blatantly reject from it, or we fall below it. Usually the 50 EMA does indicate a very special point in the market, because the 50 EMA is not so much a small moving average like a 20 or a 15 or an 8. It's not a larger time frame moving average. It's not a slow moving average such as like a 200 or a 300 or even a 100. It's more or less in the middle. It's kind of in a middle ground. It's like a middle zone. So it can indicate points of trend reversals that potentially don't sustain and don't really result in anything, or it can indicate points or at least where the trend starts to flip more aggressively to the upside or downside. But at the end of the day, guys, moving averages, all they do is they help us determine or gauge the strength of a trend. So when we see the prices move over moving averages, we say, all right, we're over moving averages, we're over what the average price would be over a specific period or time frame or the moving averages we're using. Therefore, in comparison to historical price action, we're statistically more strong here in terms of the strength, okay? So that's kind of what the relevance is of that. So we're looking at rejections on these moving averages that says, you know, this is a pretty big point over here. We're getting rejected. We didn't get enough momentum, we didn't get enough volume and pressure to flip the average price over a period of time, and that kind of generally leads to selling points. Also, moving averages hold psychological significance in the market. People generally tend to trade around moving averages. So a lot of sell orders, a lot of buy orders, a lot of short orders or long orders are placed near and around major moving averages. And that's why we see these general breakdowns or rejections from them on the time frames. Moving on from the moving averages, guys, let's go ahead and take a look at the Ichimoku cloud. Very, very good indicator at predicting overall market direction. So we'll start on a larger time frame and define some rules for Ichimoku. First and foremost, guys, how do we know if we're in an uptrend? How do we know if we're in a downtrend on the Ichimoku cloud? So rule number one, we need the lagging span to be above the clouds. On the weekly chart, not the best idea to be using the Ichimoku cloud. I'm just going to show you what's easier to see the different components, and then we'll move to a smaller time frame user correctly. Lagging span, green line, okay? Conversion line, blue line. Baseline, red line. And then we have our clouds. We have a leading and lagging spans as well. We're not going to worry about that though, all right? Our clouds. So generally when the conversion line is above and the baseline is above the price, we're generally bearish. When the momentum or this lagging span, which indicates the momentum, is below the clouds, we're in a downtrend, okay? So if we go to a smaller time frame, let's see what's happening. We saw a peak above the clouds. We saw a conversion line push upwards. Prices above the conversion line, above the baseline. Momentum was still under the clouds. We were looking pretty bad, okay? We were looking like we were going to fake out. And if you remember back to our video a few weeks ago, we were saying this 2-day close, this break over 28,000, 20,800. This is not going to sustain if we don't get a second 2-day close. It looked like a fake out, and it was a fake out. So how are we looking on the day? Well, we're looking bad. We're looking bad. And of course, lagging indicators such as, you know, the Ichimoku cloud is not particularly amazing at predicting trend reversals. It's more to do with trend strength. And when we have these large volatile moves downwards, a lot of these indicators are very much lagging. So it's not more or less saying, how is it looking now? It's saying, if the trend develops in the direction we want it to develop, or we assume the bias of the direction, how will these indicators morph and shape around that, and then how will they be placed to look? And then we can kind of analyze on a future prediction. So it's like a prediction of a prediction. So right now it's not looking ideal. We do need to clear the baseline. The baseline does actually happen to be above that massive resistance we were talking about, which being that absolute low. So it's not looking ideal. The Ichimoku cloud is not suggesting any sorts of reversals on that time frame. On the hourly chart, we are pushing into the clouds. And we already know, guys, if we're into the clouds, it's not an ideal buying place. We're looking for price action over the clouds. Lagging span is nowhere near the clouds right now. Not looking too good on a smaller time frame. Moving down to a 30-minute chart, we can see we did try to develop some sort of uptrend, but of course, we've looked at the macro structures. We've talked about these market structures now on the smaller time frame, and we've discussed that, you know, this is potentially looking bad, and we could potentially revert back downwards. And if we look at the small time frame right now and actually zoom into it, we can see from the start of the video, you know, where we were at the start of the video, we were up around maybe somewhere over here. We can see we're already starting to move or creep closer down to this trend line, which is going to be our possible support point, where we could see a possible bounce, or of course, if we lose it, a rejection back into that 17,000, 16,800 range, okay? I think that is going to be it. I'm going to leave it there. I hope you all enjoyed the video. If you've got any questions, leave them down below. Remember, like, comment, and subscribe to the channel. It helps support me, helps tell me you like the content. And of course, like always, guys, if you have constructive stuff to say, if you want a piece of information discussed, if you've got a question, leave it down below. Now, actually, completely forgot. There is a question I wanted to go over. This one person said, what do I think of KuCoin exchange? Look, I don't want to bag on anyone exchanges. The reason I brought KuCoin up yesterday in yesterday's video was in September 2021. the 7th of September. I don't know if how many people are around there. KuCoin literally went down for like, I don't know how many hours. It went down for a very long time. The exchange shut down. And basically everyone's stop losses did not get triggered. Everyone got liquidated. I know people who lost 6-7 figures from that day just from liquidation spikes. So when the exchange went down, they said they would refund everyone and didn't refund anyone. So stay away from exchanges that do have shady history, particularly a lot of malfunctions, a lot of outages. Stick to the exchanges that are reliable, that are transparent, that do actually care about their customers. And that's why I use Bitget. But anyway, guys, I'm gonna leave it there. Hope you enjoyed the video. See you tomorrow.